Own your money. Own your life.
I'm Jared Dillian. This is the Jared Dillian Show. If you want to call to talk about your money, please call 844-305-7800. That's 844-305-7800. This is the Jared Dillian Show. Also, you can go to my website, which is jareddillianmoney.com, where we're going to be having something cool in about 2 weeks. It's going to have to do with your portfolio. It's very important, and I think you're going to want to pay attention to that. So you can, I'll let you know. I've been talking about it for a while, but it's very cool, and we'll let you know when that goes up. You can also follow me on Twitter at DailyDirtNap. The craziest stuff is happening in the stock market right now. I haven't seen this since 1999. This is the craziest thing I've ever seen. The market's been going up. It's up quite a bit from the lows. And do you know why it's going up lately? Do you have any idea? It's going up because of retail investors, because of small investors. And this is, that's not usually what drives stock market performance. It's sort of a misconception among people. People think that it's, the millions of small investors that drive the stock market higher. 99% of the time, that's not the case. Institutional money is much, much bigger. And retail is mostly an afterthought. But this is what's been going on. I don't fully understand it. I mean, I understand part of it. Like, retail investors are not usually a factor, but we are finding out that these stimulus checks are being plowed into the stock market. And I'm not making this up. If you get a stimulus check and put it in the stock market, please call 844-305-7800, 844-305-7800. I want to hear from you. This is crazy stuff. And in terms of buying stocks, they're buying all the garbage. They're buying the trash. Like, they're not buying Apple. They're not buying Google. They're not buying Microsoft. They're buying the airlines, which is crazy. The airline business is totally screwed. Totally screwed. I mean, it's not like your restaurant that closed down for a couple of months and they open up again and they have to hire everybody back. It's not like that. They are totally screwed. The level of travel that we had before is not going to be achieved for years. And they have too many planes. They have too much capacity. It's bad. And not only that, they've been bailed out by the government. So the government's going to want a piece of the upside. There's zero reason to buy airline stocks here, like absolutely no reason. And all these retail investors are plowing into airline stocks, and we'll talk about why in a second. They're buying stuff that's down. They're buying small cap stocks. They're buying value stocks. It's changed the whole texture, the whole character of the market. It's totally changed. And like I said, the last time that retail investors were a factor like this was in 1999 during the dot-com bubble. Now, I remember this. Like, I was sitting in an office full of government employees and nobody's working. Everybody is trading stocks. Everybody was trading stocks, and it was driving the market. And that was the biggest bubble that we've had in history. That was the biggest bubble we've ever had, the biggest stock market bubble. Wasn't not in economic terms, but in terms of stocks, it was the biggest bubble. And it's happening again. And the crazy thing is, it's happening right after the stock market crashed. Usually when the stock market crashes, people get demoralized and they don't invest for years. And that's what I thought was going to happen. I thought the stock market was going to go down and stay down. It's not what happened. People plowed into the market. So now the conventional wisdom on Wall Street is that you should be doing the opposite of what retail investors are doing. They have this thing called the American Association of Individual Investors, which is sort of like it's a club. It's a club for people who like to trade stocks. And the reason I bring this up is the AAII, as it is known, has a survey and it's a sentiment survey of its members. Now, this is a small club. They don't have that many members, and there's only about 300 people that respond to the survey, so the data is usually bad. But what was I going to say? Anyway, so this measures sentiment among small investors, and it's high. It's high. So the reason this is happening is you have a lot of people that were betting on sports. Yes, sports gamblers. And they don't have any action. They can't bet on hockey. They can't bet on basketball. They can't bet on baseball. I totally failed to understand the amount of legal and illegal gambling that goes on in this country, because what's happening is all these people, they want to gamble on stuff, and the only thing they can gamble on is the stock market. And so all this money that was going towards sports gambling is now going towards stocks, and they're having a great time. They're plowing money into the stock market. The stocks are going up and people are making money. It's the craziest thing I've ever seen. It's crazy. And these are not investors. I would not call these people investors. It's pure gambling. And this happened right after a crash. Market crashes 37% in a month. And what do people do? They jump right back in. This is not how it's supposed to work. It's not how it's supposed to work. And if you think about the housing bubble, we have this statistic called the homeownership rate. The homeownership rate. And for years, the homeownership rate was 63%. 63% of people owned a house and 37% of people rented. And what happened during the housing bubble is that the homeownership rate went to 70%. And that extra 7% of people were people that had no business owning a house. They weren't responsible. They couldn't take care of the house. They couldn't make the payments. And that's really what caused the crash. You just had a bunch of people that had no business owning a house. Now we have a bunch of people that have no business owning stocks. I mean, when you talk about inexperienced novice investors, I mean, these are the most inexperienced people that you can possibly imagine. Totally inexperienced. So it's exactly like the housing bubble. And the best part is they have free commissions. We got rid of commissions a couple of months ago, and now people can trade for free, so they're trading like crazy. The whole thing is bad. If you're listening to this and you're thinking, I don't know what you're thinking, but if you're one of these people that like you couldn't bet on baseball anymore and now you're trading stocks, you just check your motives. I'm pretty sure this is not what was intended when we sent out the stimulus checks. We wanted people to buy food. We wanted people to pay their rent. We wanted people to buy stuff. Instead, they are gambling with it. And this is the law of unintended consequences in full effect. And here's some more color on this. Here's some more background. Have you ever heard of a guy named Dave Portnoy? Dave Portnoy is the founder of Barstool Sports. Kind of an interesting story. Barstool Sports is like this irreverent sports website, highly irreverent. And Portnoy is kind of a carnival barker type of character. But anyway, during the quarantine, he started day trading, and he would take videos of himself day trading, and he would put his P&L, and he would show everybody his P&L. He's mostly losing money. He's losing a ton of dough. But you have a lot of people that follow this guy, and he talks about stocks. He was the one that got people into the airlines. And you have, I'm not kidding, you have millions of people with Robinhood accounts that are trading airline stocks because of Dave Portnoy. It's, the guy's going to run for president. I'm just telling you that's going to happen. It's going to happen. The Barstool guy is going to run for president. I don't mean to alarm anybody, but that's what's going to happen. He has a lot of followers. He's also talked everybody into buying Penn Gaming, which is a little shady. Penn Gaming bought Barstool Sports about 6 months ago. The stock was trading at $3. Now it's trading at $30 because he talks up Penn Gaming all the time. This is a casino company. This is a casino company where the casinos are closed. They're not open because of the coronavirus, and the stock has gone up 1,000%. Retail investors. So there's a lot of crazy stuff happening out there. The question is, can the market go down under these circumstances when you have all these people plowing into the market? I'm going to tell you that since this has been happening, the price action is very different. It's very difficult for the market to go down. I watch it trade during the day. It drops, it comes back, it drops, it comes back. Before it was crashing, now it's having a hard time selling off. I mean, honestly, I think we need a pretty big catalyst for the market to meaningfully sell off. Sorry. I keep thinking China is going to be the catalyst. Trump had a press conference today talking about sanctions that we're going to impose on U.S.-listed Chinese companies. That ended up being not as bad as people thought. People thought we were going to do more tariffs, more trade restrictions. But I think, China this week took over Hong Kong. Hong Kong is no longer a free and independent city. It's now mainland China. That happened this week, and it's like the number 4 story. Like, that's how crazy this is. So, China is a source of instability in the world. The rule in China was that as long as the Politburo provided growth, everyone was okay with social credits and surveillance and everything's like that. China is now in recession, and now that China has been weakened, they're lashing out at Hong Kong and at Taiwan. And I got to tell you, there's always a bunch of reasons for the market to sell off at any point in time. Sometimes it does, sometimes it doesn't. There's no sense in betting against it until it shows some weakness. We're going to come back in just a couple of seconds and talk a little bit more about this idea of the casino. I'm Jared Dillian. This is The Jared Dillian Show.
The Jared Dillian Show.